Welcome back to the Deep Dive. We're diving into something today that's been generating a lot of buzz in the financial world. Malaysia's new dividend tax from their budget 2025.
Definitely a hot topic.
Yeah, you guys sent in a ton of research on this, and investors are definitely watching closely. So we got to break this down, especially for those of you focused on Southeast Asia.
Absolutely. Anytime a government tweaks its tax policies, it sends ripples through the investment community.
Okay, so let's jump right in. What's the gist of this new dividend tax that everyone's buzzing about?
Well, the core of it is a new 2% tax on any dividend income that surpasses RM 100,000 annually for individual shareholders. And this applies to both listed and private companies.
So to be clear, it's only that 2% that kicks in after hitting that RM 100,000 mark.
Precisely. If your dividend income falls below that, you're in the clear. No impact from this new tax. But if you cross that line, that extra 2% applies to whatever amount exceeds that RM 100,000.
Okay, starting to get a clearer picture here. So who are the main folks impacted by this change?
That's where the government's intention comes in. With that RM 100,000 threshold, they're really honing in on higher income folks, that top 20% income bracket.
So it's less of a broad stroke, more of a targeted approach.
Exactly. And to protect some investments and make sure specific groups aren't hit harder than others, there are actually some exemptions built in.
This is where it gets interesting for me. Tell me more about these exemptions and how they fit into the overall strategy.
Sure thing. Dividends from some specific sources are actually exempt from this new tax. So we're talking about dividends from the Employees Provident Fund, or EPF, Amanah Saham Nasional Berhad, ASNB, and also unit trusts.
So those are some really common investments for a lot of Malaysians, especially thinking about retirement and long-term savings.
You got it. Exempting those is a way for the government to shield those key savings plans from the new tax and maybe even encourage people to put more money into them.
Almost like a built-in incentive to prioritize those, which
Yes.
goes along with the government's whole thing about promoting financial security.
Exactly. And it goes beyond local investments, too. Dividends from foreign sources are exempt, which is key for those who are spreading their investments internationally.
That's really interesting, that exemption for foreign dividends. Makes me wonder how that impacts Malaysia's competitiveness overall as an investment destination.
Great point. To really understand that, we got to zoom out and look at how Malaysia stacks up against its neighbors, especially when it comes to pulling in foreign investment.
Perfect. Let's take that regional look next. I'm really curious to see how Malaysia's new dividend tax fits into the whole Southeast Asian picture.
So yeah, when we zoom out and look at Southeast Asia, that's where this 2% dividend tax gets really interesting. You've got kind of a whole range of approaches to dividend taxes across the different countries.
That's like every country's trying to find that balance, attract investment, but also keep their own budget in check.
Exactly. On one end, you've got Singapore and Brunei. They're often seen as those tax havens because they have zero dividend tax.
Yeah, that definitely sounds appealing at first, especially for investors who are all about maximizing their returns.
It does, but you always got to look at the trade-offs.
Right.
Zero tax might sound great, but then you got to think about things like the cost of living, the rules and regulations, and just the overall economic stability.
It's not just about chasing the lowest tax rate. You got to see the whole picture.
Exactly. And then on the other end of the spectrum, you have places like Indonesia and the Philippines. They've got a 15% dividend tax rate.
Whoa, that's way higher than Malaysia's new 2%.
Right.
I mean, that could be a deciding factor for some investors, especially those looking for that steady income from dividends.
For sure, Malaysia's 2% rate makes them pretty competitive in the region. It's like they're signaling to investors that they're serious about attracting capital, but they still got to generate revenue, too.
It's a balancing act, for sure.
Yeah.
But beyond just the numbers, how do you see this impacting Malaysia's overall position, in the Southeast Asian investment scene?
Well, that's where things get even more interesting. The impact really depends on how other countries react to Malaysia's move. Will they try to undercut Malaysia to stay competitive, or will they hold their ground? It's kind of like a game of economic chess, each country trying to anticipate the other's next move.
So this new dividend tax could set off a chain reaction across the region as countries adjust their strategies.
Exactly. But it's not just about attracting those foreign investors. This new tax could also change how people invest within Malaysia itself.
Oh, that's an interesting angle. How so?
Well, think about it. If you're a Malaysian investor and you know you'll be taxed on a big chunk of your dividend income above RM 100,000, you might start looking at other options.
Like what kinds of options?
Maybe you shift some of your investments towards growth stocks. They don't usually pay high dividends, but they have the potential to grow in value much faster. Or you might diversify into real estate or other things that aren't directly hit by this dividend tax.
So this tax could actually shake things up within Malaysia, encourage a wider range of investment strategies. It's like a catalyst for change.
Precisely. And those changes can have ripple effects throughout the entire economy, influencing which sectors grow and which ones struggle.
This is fascinating. We've talked about the impact on local investors.
Hmm.
We've seen how Malaysia compares to its neighbors. Now I'm curious about what foreign investors are thinking. How do you think they'll view this new dividend tax? We've been talking about how this new dividend tax compares to the rest of Southeast Asia, but we haven't really touched on how foreign investors might react to it. Let's get into that perspective.
Yeah, that's a big piece of the puzzle. Foreign investors, they're a major force in any country's economic growth.
Totally. They bring in money expertise, they create jobs.
Yeah.
So how do you think this new dividend tax is going to impact their view of Malaysia?
Well, you got to remember, foreign investors, they're always weighing risk versus reward. They want a solid return on their investment, of course, but they also want to minimize their risks.
And taxes are a big part of that risk calculation, right? A high tax burden can definitely make a country less attractive.
Exactly. But in Malaysia's case, that 2% dividend tax, it's pretty low, especially compared to some other countries in the region, as we've been discussing.
Right. That could actually be a plus for Malaysia, showing that they're trying to create a tax system that's friendly to investors.
It's definitely a factor. But, smart investors, they don't just look at the tax rate on its own. They also look at the bigger picture, the overall investment climate.
So things like political stability, a transparent legal system, a skilled workforce, that all plays a role.
Exactly. They want to know that their investments are safe and that the country is a reliable place to do business.
And Malaysia's been working on those things for
Right.
now.
They have. And that's important to keep in mind. This new dividend tax, it's not happening in a vacuum. It's part of a broader strategy to make Malaysia more attractive to foreign investors.
Makes sense. So for those foreign investors who are maybe considering Malaysia, this new tax probably isn't a deal breaker.
I don't think so, especially when you factor in the long-term potential. They'll be weighing this tax against the potential gains as Malaysia's economy continues to grow.
Always comes back to that risk-reward balance.
Exactly. And remember, foreign investors, they're not just focused on those dividend payouts. They're looking at the big picture, the possibility of their investments increasing in value over time.
And if Malaysia's economy keeps growing, that could outweigh any impact from the dividend tax, right?
Exactly. It's a balancing act for investors. They're weighing the potential downsides of the tax against the potential upsides of investing in a thriving economy.
Wow, this has been such an insightful deep dive. We've really explored this new dividend tax in Malaysia, analyzed how it impacts local and foreign investors, and even looked at how it positions Malaysia in the Southeast Asian economic landscape.
It's a complex issue for sure, but at the end of the day, the investors who stay informed are the ones who come out on top.
Couldn't have said it better myself. Remember, everyone, knowledge is power. Stay curious, keep researching, and make those investment choices that really align with your goals. Thanks for joining us on this deep dive.